Welcome to Market Talk. I'm Amber Lancaster here with Paul Mampilly. Today's update is for the week of April 20th, 2020. I'll begin with the latest economic overview, my innovation story of the week, and developments in America 2.0. So let's begin. So first in March, we saw retail sales come through and the numbers were released last Wednesday. There was a telling positive statistic within the numbers. While the majority of the U.S. consumers are staying at home weathering the pandemic, non-store retail sales, aka online retail sales, saw a jump. In all, March non-store retail sales gained 9.7% year over year, 8.5% quarter over quarter, and 3.1% month over month. And we're not just seeing the increase in sales in your typical online product purchases, but new burgeoning sales growth in online food shopping from curbside pickup to home delivery. So before the virus, online grocery shopping sales were projected to reach $59.5 billion by 2023 per Statista data, and as much as $143 billion by 2025 per Food Marketing Institute and Nielsen. But due to the pandemic, these forecasts could see a significant boost. Consumers are finding themselves shopping for food online now more than ever, becoming more and more comfortable with the entire process. And this America 2.0-esque exchange traded fund or ETF says it all. This ETF is long bullish on online retail sales and short bearish on the traditional brick and mortar stores. So the ETF is called ProShares Long Stores, Short Retail Stores. And look at this comparative returns chart. The ticker is for clicks and its total return is positive year to date 28.5%, while the Dow, the NASDAQ, and the S&P are understandably underwater. So moving on to our economic front, an effort to protect as many American jobs as possible is in the works. The Treasury Department just announced that it will permit companies to defer paying tariffs on a plethora of imported goods for 90 days. The goal for this tariff payment delay is to help U.S. businesses severely affected by the pandemic to free up as much cash as possible. And speaking of cash, Congress is near a bipartisan additional funding agreement totaling as much as $500 billion. So this new tranche of funding will be geared toward infusing the small business aid program and providing money for much needed virus testing and hospital help as well. So where upcoming economic releases are concerned, there are 7 major releases this week. On Tuesday, March existing home sales will post at 10 a.m. On Wednesday, MBA mortgage applications for the week ended April 17th will post at 7 a.m. On Thursday, we'll see a trio of releases. Initial jobless claims for the week ended April 18th at 8:30 a.m. The preliminary April reading for market U.S. manufacturing PMI at 9:45 a.m. and the March new home sales at 10 a.m. And on Friday, we'll have a duo, and that will be the March preliminary durable goods orders and the final April print for University of Michigan sentiment. There will be both posting at 8:30 a.m. and 10 a.m. respectively. So now for my innovation story of the week, and this is for those who like to eat fruit. Get ready for the CRISPR berries. So per Life Science, CRISPR technology is, quote, a simple yet powerful tool for editing genomes. So taking this high-tech editing to the next level where food is concerned, agricultural and biotech companies Pairwise and Plant Science Inc. are working together, and they're going to make gene-edited blackberries and raspberries. So these berries will be gene-edited for faster growing, optimum nutrition, and longer shelf life. So now for my America 2.0 housing update, HousingWire.com is reporting that despite virus fears and pessimism, home buyers are still shopping and mortgage lenders, well, they're still originating loans. And this resilience helps underpin our America 2.0 housing forecast, Paul, that there's a housing shortage and that there's still cooped up demand, especially from the millennial generation looking for their first forever home. So that's it for me this week. Paul, please tell me what's on your mind.
Thanks, Amber. I think I am ready for some of those CRISPR berries. I mean, that looked pretty good. And when you showed that to the team, everybody was just like, sign us up for it. So, I definitely would like some. And as you have been noting, while the media is projecting really sort of nonstop gloom all the time, there are so many beautiful green shoots, yellow shoots, really beautiful things going on across our incredible country, where there are so many signs of optimism, so many signs of positivity and bullishness. Now, people say, hey, well, Paul, the stock market's down today. Yes, it's true. However, there's actually a positive lining to that, Amber, which is that the price of oil is going to be at its lowest level in what, 20 years?
Yes, quite.
Something like that. So when we come out of our various cocoons that we've been in, gas will be cheap. That's a huge boost to people because it's a huge amount of money that people spend. And as we come out of this, and I've been talking about this with Ian in our Slack channels, and we did Ian cast about this, which is that there's been a lot of debate, Amber, about the shape of the recovery. And there's been a lot of internal debate within Banyan Hill, very good-natured debate about a W recovery. There's a L recovery. It's the whole alphabet smorgasbord that's now available. I'm sure there's, somebody will come up with a Z recovery. There's all kinds. We ourselves are favoring the V recovery. V for victory, the V recovery. And I believe this is the reason, Amber, why the stock market bottomed out somewhere I think the third week of March or so, and has just been going up. And here's the case for this, Amber. Here's why I believe that even though what's going on today, I believe is largely related to oil, which is a very technical thing. And I feel like you look at the real action that's going on. Friday told you that this is an America 2.0 bull market, an America 2.0 bull market. And that's because coming out of this, we will have consumed all business inventories. We will have consumed a lot of personal inventories, and we have to rebuild all of that. And we have to rebuild that actually globally, because this has been a global event, not just in America, a global event. So that means businesses will be at max capacity utilization. That means very high GDP. That means very high sales, very high earnings. So you do that and you look at, so that takes care of the businesses. And of course, being at home, we are consuming things ourselves. So we will continue to buy. Once we're active, we will actually consume more. So we will need more of what is being made. And then another big shift is going to happen, Amber, which is that people over the last 20 years have prioritized capital efficiency and said, well, there's no need to keep inventory. And that means no one had any inventory going into this. Well, you can bet coming out of this at every level of the distribution chain, at the producer level, the distributor level, at the personal level, everybody's going to keep some. So that means even more demand. So in other words, we are going to have an astonishing, a record-breaking recovery that I believe will blow people's minds. And because we have been cooped up and we have been really completely taken by coverage of the virus and coverage of the crisis, people are not thinking about what is going to happen. Instead, they're focusing on what has happened. And we say this all the time, markets are forward-looking.
Yes.
They price in the future. And we can look at everything that is going on, from the recovery in China in car sales, from what is going on at the ports in Shanghai and other places. There is an incredible, phenomenal, astonishing recovery that is underway and I believe is going to happen. And one of the ways to take advantage of this is really to be in America 2.0 stocks that you saw on Friday are going up. And one astonishing, phenomenal service that we have that takes advantage of this particular situation, it's our Rapid Profit Trader service that I run with my incredible colleague, Ian Dyer, and where we've closed out winning trade after winning trade, week after week, because this has been incredible market recovery, and we've been able to take advantage of our understanding of this V recovery. And we've had 5 winning trades in a row, Amber, 5 winning trades in a row in this environment. So if you want to get in on what I believe is a phenomenal option service that I do with my colleague, Ian Dyer, click on the strong hands above. That will take you to a page that will give you all the details to get in on America 2.0 using this option service, phenomenal trades that you can get in doing about, 1 trade a week, so 52 per year. And that's our goal, is to try and hit at least 1 trade every single week, 1 profitable trade every single week. So click on the strong hands above and that will take you to a page to give you all the details. So I am still bullish, optimistic, positive, Amber. BOP, as I put on my Twitter page at Mampilly Guru. Why don't you give folks your Twitter handle as well?
Of course, I can be found at A Lancaster Guru.
And I want to say thank you to all of you for getting us to 20,000 subscribers. Thank you so much. Don't forget to subscribe to our YouTube channel. Give this video a thumbs up and comment below. And with that, back to you, Amber.
Great ideas, thoughts, insights, as always, Paul. And thank you to our viewers for tuning in this week. We wish you a healthy, productive week ahead. And until next time, everyone, take care.